February 4th, 2004 marks the date a Harvard sophomore, Mark Zuckerberg, launched a social media platform, the Facebook. The site was initially intended to connect Harvard students online. Around that time, it was quite common to see colleges create a class directory known as the Facebook, which contained each student's picture, name, and date of birth. Harvard had their own plans to digitalise this concept, but Zuckerberg got there first, allowing anybody with a Harvard email to sign up to his site. In just one day, over 1,000 people had registered, and a month after launch, the platform extended to those at Stanford, Yale, and Columbia colleges. And from there, the numbers continued to grow. Facebook currently has almost 2 billion daily active users. There was just one problem: the Winklevoss twins. You'll have probably heard this part of the story. These two identical twins, Tyler and Cameron, recall the years of 2003 to 4 slightly different. They claim that they came up with the idea of Facebook with a fellow student and that the platform was originally called Harvard Connection. At that time, Mark Zuckerberg was becoming a well-known programming prodigy on campus, so once they had a prototype for their social media site, they approached Mark to help them finish the project. Tyler Winklevoss told The New Yorker in 2006, "We met Mark and we talked to him and we thought this guy seems like a winner." And Mark did help them, but whilst Mark was working on Harvard Connection from November 2003, he continued his own projects, including the Facebook. So in September 2004, Harvard Connection founders, the Winklevoss twins and fellow classmate Narendra, filed a lawsuit in a Massachusetts federal court accusing Mark Zuckerberg of delaying their project to create the Facebook and copying some of the code they had paid him to create. Their aim? To gain control of Facebook. A countersuit, and many years later, in 2008, an agreement was made. The Winklevoss twins would receive $20 million in cash and $45 million in Facebook stock. This definitely created some controversy in response to a poll from The Guardian that asked, were the Winklevoss twins entitled to more? 18.6% said yes and 81.4% said no. Throughout the lawsuit, the twins hired top experts, including their dad, to do an appraisal of Facebook, and based on the appraisal, they settled for the total value of $65 million, which has since more than doubled. It's been reported that the twins refused to pay their lawyers and sued them for malpractice. They lost in arbitration. And after this entire settlement, they sued again, aiming for $600 million, but this got denied. Moving on from court, in 2012, the twins founded an angel investment company, Winklevoss Capital, through which they bought $11 million worth of Bitcoin by 2013. It's said they bought Bitcoin under $10 per coin. Eventually, in 2014, the twins founded Gemini, a cryptocurrency exchange to buy and sell crypto. This was the first exchange to be licensed by the New York State Department of Financial Services, and the twins were the first known Bitcoin billionaires, aside from Bitcoin's creator Satoshi Nakamoto. And as for Mark Zuckerberg, this court filing with the Winklevoss twins was the beginning of many. The Facebook site has been accused of allowing misinformation and fake accounts to inflate the numbers of users. We've also seen the social media platform receive criticism for selling its users data and for not protecting that data enough. With many other mobile applications popping up over recent years fighting for screen time, Facebook is struggling to keep up. Facebook has an aging demographic, something applications like TikTok do not struggle with. In fact, at the end of last year, there was a drop in daily active users for Facebook for the first time ever. We've seen Facebook's Instagram try and replicate TikTok-style content in the form of Reels, but they haven't quite caught on the same. And in June this year, Facebook officially rebranded to Meta, and Mark said, "From now on, we're going to be the metaverse first, not Facebook first." Since then, Meta have spent around $10 billion trying to bring Zuckerberg's metaverse vision to reality. Some believe this name change was an attempt to shake off the negative sentiment around Facebook. Others believed that Mark knew that the aging demographic for the platform was a difficult challenge to face, so he's trying to expand further and faster than his rivals into virtual reality. But since the rebrand, Mark Zuckerberg's net worth has shrunk from $118 billion to just $37 billion. And on the 26th of October, Facebook's parent company Meta Platforms reported a quarterly revenue of $27.7 billion. This is a decline of over 4% year on year. The company predicted their revenue to be between $30 billion to $32.5 billion this quarter. This is less than common analyst expectations. It was expected to be around $32.2 billion. And its profit plummeted 52% to $4.4 billion. And this news caused a free fall in the market, and Facebook stocks have plummeted 20%. The stock is currently at its lowest since 2016. Comparing Facebook's 70% decline this year to the tech-heavy Nasdaq's 30% decline this year, things aren't looking too positive. Following this decline, Brad Gerstner, the founder and CEO of Altimeter Capital, an investment firm that holds around $320 million worth of Facebook shares, has made some comments about the company. He has said Zuckerberg and Meta's board of directors have lost the confidence of investors, and that the company's core business hit a wall last fall, which caused the team to hastily pivot the company towards the metaverse. He believes this change of focus for Facebook is moving the company away from many of the reasons that investors chose to buy the stock in the first place. We've also heard from Brian Nowak, managing director at Morgan Stanley. He's cut his price target from $205 to $105. This is because he expects Meta's issues to persist as they continue spending on their new project. So, it hasn't been a good year for Facebook so far, but is this a buy the dip opportunity? Let us know what you think in the comments below.